Hello, everyone. Welcome to Next Level Humanity podcast. I have Marlon Ramirez here. Hi, Marlon. How are you?
Hello, pleasure to be here. Thank you for having me, Nefsa.
Yeah, lovely to have you here. Marlon is an investor, Blue Impact Invest, and our theme today is capital with consequences, impact, responsibility. We're going to talk about the inner discipline of choosing better futures. Welcome. And we have a topic, of course, investing and investments are our topic. Startups, BCs, as usual. And my first question to you, Marlon, will be impact investing is often described as a strategy, but for some, it becomes a calling. When did
Yeah,
the idea of aligning capital with values become personal to you?
I would say this was very early on because of my life trajectory. I I was born in Colombia. My parents immigrated to New York when I was 6 years old, so I saw firsthand systems that don't work. So economic discrepancies in Latin America versus what I saw in the U.S. and even within the U.S. And so I always came from a framework like things could be done better, like systems could be better. And so, but I wanted to learn how the systems operate, right? So I had the opportunity to study economics, international relations with a focus on economic developments, kind of got the theory at Brown when I was in college. And and then but I was like, look, I need to get a real world experience. So I started in Wall Street in investment banking, covering supply chain, logistics, transportation. And I was like, oh, wow, amazing. These are actual companies that even though they're for profit, they are doing an essential role in improving society, right? So I came to see supply chain logistics transportation as the foundational layer for economic development. So that's why I love the industry of supply chain because we all need to consume food and we all need pharmaceutical products. We need to, and so it goes back to like the first trade that we had as humanity. We had barter and trade, right? And so that's why I first love supply chain because there is an inherent benefit to society. And secondly, it's when you look at the inefficiencies within supply chain and logistics, they're reflected in that 60% of carbon emissions come from the supply chain. It's driven by many factors, but a lot of it is inefficiencies in the way that we built the supply chain. So I saw it's a very particular space where you could add efficiencies optimization and at the same time have very positive socioeconomic effects through decarbonization and through economic development.
Yeah, very exciting. I mean, in general, I think impact investment and in general investing in startups is very exciting. I even sometimes say, as a early stage angel investor and LP, I love investing in this area because it's kind of like also a giving back.
Yes.
If you have been an entrepreneur yourself, like I am, you know the whole process, and you're at service, and you want to do good, and you want to solve problems, and you want to help people. And I think helping founders that want to help people is yeah, it's very exciting. It's very privileged. I think we are privileged, very privileged to be in this arena of projects and investments and all that. What early experiences shaped your sensitivity to inequality, sustainability, and systemic imbalance?
It again comes to my story, right? My parents immigrated to the US for a reason, right? It was at the time Colombia was it was a very tough place because of, the drug trafficking, economic opportunity. And so, my parents came to the US because of that. So from the beginning, when I was 6 years old, very young, I saw how broken systems affect society, right? And so I didn't know about impact investing. I was kind of married in more toward my own North Star of like, look, there's companies that do such great for the world. We should really empower those companies. And so, after doing investment banking at UBS, we covered the JetBlue IPO, and I had the opportunity to, I wanted to learn how to operate. I didn't want to be a banker just transacting at like IPOs and like the stage where the companies just reach the top, right? I wanted to learn how to build a company and get it there, right? And we covered the JetBlue IPO, and I was like, wow, this is amazing. This is like a young startup, that goes up against Delta in New York, which is like the kind of dominant airline, and like wins New York over, and brings and has like a real economic effect in the city, like bringing down prices for travel and stimulating travel between New York and Florida and DC and all and Buffalo and all these places where and so I was like, this is amazing. And but then you look at the numbers and you're like, airlines really don't make money. It's like very tough to make money. So I came to see airlines as like an essential infrastructure necessary for economic development, but it's very tough to make as a business to actually generate profits and generate a return. But for me, I was at a phase where I was like, I wanted to learn, and then I had the opportunity to then start a brand new airline. So I and go full circle and help in Latin America's economic development. So with the founder of JetBlue and a few of the gringos, right, we went down to Brazil and we started the JetBlue of Brazil, Latin America. And I was the youngest founder, spoke the best Portuguese. And so like I had a lot of responsibility. And that's where I was like, you know what, this is like, yes, it was great for New York, JetBlue, but when you take a country that needs more air service, needs more competition, this was like literally, I felt like we're doing the job for the government. Like, it's like we're helping develop your country, right? And we did have a lot of support from the government, from the local aircraft manufacturer, Embraer, because we were making a massive impact in the country and the region through helping business. I mean, there's so much. I mean, when you look at airlines, like they make so little. They make like the economic benefit is like 40, 50, 100 fold for the cities where they operate as opposed to them what they make for themselves. So it's almost like, something like a nonprofit. But anyway, so that was the core of like what led me what this like, wow, you could actually build businesses that make such a positive impact in the world. And then when I started, I started another company after Azul, a logistics integrator with freighter aircraft, with warehouses, with technology for warehousing, for trucking. And I got deeper and deeper in supply chain and logistics. And I was like, wow, like what we did for passenger, it's like it's so many gaps, and it's so, in supply chain logistics, that I was like, something needs to be done there, right? And the beauty about the supply chain logistics space is that it's it's a lot easier to make money than airlines. It's easier to optimize than passenger airlines, and it's easier to make an impact and from a climate perspective. So I saw all three things align. I was like, wow, this is amazing. I could, you could help optimize, reduce costs, you could reduce carbon emissions. So I was like, this is like a perfect type of area for me to focus on. And again, goes back to my North Star of like economic development and helping. And so it was like perfect. Like, for me, it was almost like a calling. And so like you would go do this. And on top of it, you leverage the experience that I have and my backers in the fund to help founders build, right? So it's like it's a way to also give back. So there's so many different layers of giving back and making an impact that for me was just like, when people ask me, it's like, hey, Marlon, you could have raised hundreds of millions and raised another company and build another company. Why are you starting like as a fund manager, kind of like from scratch? And I was like, well, because I could see myself doing this for the rest of my life. Like, just literally the fulfillment that I get from having helped founders, not only with capital, but with overcoming all of the obstacles and challenges that inevitably you have as a company builder. For me, that's very fulfilling.
Yeah, very fulfilling. And investing often means operating with incomplete data and long feedback loops. How do you
Yeah.
build conviction when results may take years to surface? Because I think as VCs, that's kind of like the most important thing.
Yeah, that's a very good question. And I think that's what a lot of VC investors, they grapple with that, right? Because the returns are not immediate. You have to have high conviction on a certain problem solution set. And up to this time, I think the majority of venture has been led by more agnostic VCs that are investing in many verticals, and maybe the investor hasn't lived the problem, and so I think that could be reflected in numbers. The reason why we have such high casualty rates in venture, obviously, it's very normal given the stage that investors invest in. But I also think it's a factor the investors themselves. Like the investors themselves, for the most part, haven't lived the problems and navigated it. Like I like to say, being building a company, a startup is like, you're in war, you're like in the trenches, and the investors haven't been in the trenches, right? And so I've been in the trenches. Like
Yeah,
I've
and that
seen
I
what,
think that makes a very big difference. It's kind of like I sometimes say, it's like there are some, as you know, teachers out there in universities or colleges teaching stuff, business schools teaching stuff they didn't experience themselves.
yeah,
And it's a whole different reality. It's like sometimes I find what they talk about very unreal because
yeah,
it's different in reality. It's like, what
it's
I experienced in the business world as an entrepreneur, as a founder, is very different. And
it,
that's
it-
what you're saying. I think for VCs to truly help founders, I think they need to understand founders, and that makes VCs like yourself very privileged. You're like, you know your thing. I think that's yeah.
yeah, and that frankly, I thought coming into venture, because remember, I've been operating like over 20 years building companies and so going into venture, it was, like 5 years ago that I started angel investing and helping founders. So relatively new vis-a-vis the market. I expected, I was like, I'm coming in with expectation that these VCs are generating all this value. And I was like, but I have a special value. And then I started to be like, I started investing alongside other VCs, and then the founders would come to me and it's like, hey Marlon, can you help me with this? Can you help me with that? And I give them advice and be like, well, I would do this that way. And it's like, and then it's like, after a few times, like, hey, so what are the other VCs doing? How are they? It's like, and they're like, hey, Marlon, between us, like, you're my biggest value add. I'm like a 50K check. Other VCs writing millions, and I'm your biggest value add. So I'm like, I was kind of eye-opening for me, right? Where I was like, this is VCs do a lot of marketing. It's like a lot of marketing of like, obviously it's important, to get your name out there and generate deal flow. And part of the marketing is also, hey, you have a strong brand as a VC. It also helps your portfolio companies, obviously, important. But, it's also marketing where the founders think they're going to get a lot more value than they actually receive, right? And so I was like, I don't want to be that VC. I gotta build something that I would at the end of the day, I'm going to be like, you know what? I'm glad that I had Blue Impact as an investor because they actually made a difference, right? And so that's what I'm building at Blue Impact. I think there's going to be a pendulum swing. Right now, it's tough to raise VC funds, especially as an emerging fund manager. And but the pendulum's gonna swing, and I think the VCs that are gonna win are those that effectively add real value
Yeah.
because I think that the reputation is built upon that, right? And so I've seen a lot of VCs that they're doing great now. Maybe they're raising bigger funds, but once the pendulum swings and you have this capital transition, which is going to happen, we have the new generation that it cares more about impact, innovation. So there's going to be, in my view, a lot of capital coming to innovation. So venture capital is going to benefit from that. But then when you in a world where you have a lot of capital in venture, right? It's like, well, what VCs are going to do the best? Because at that point in time, all capital is the same. It's going to come back to like the 2021 where the founders choose who their VC backers are going to be. And I think the founders are going to choose those that, given all capital, all being equal, they're going to choose those VCs that effectively understand them, empathize, and add more value.
Yeah, and yeah, you're right. I think the benefits and drawbacks of being a VC. Coming from a financial background, I think we need financial people in the team, in VC's team, but also, someone who is a founder and who has all the experience. That changes a lot. I personally experienced that relationship with VCs when I was a founder
Yeah.
myself, as a founder myself. That experience matters a lot, and sometimes just one thing an experienced founder say changes the game, you know,
Yes.
because the founder, especially the young generation, it takes maybe years to get to that level of, experience. And then
Yeah.
a mentor or a VC just come, or an investor just says, why don't you try this? And you're like, wow,
Yeah.
such a,
Yeah.
yeah,
I,
it's
I've
great.
raised capital, like all different types of capital, right? Private equity, like LP capital, and I've seen how tough it is and how much it detracts from like running the business, for example. And so, like, as a founder, you want to focus on building the business, right? It's like that's what build a business. You manage the team. If you're a good manager, obviously you build a good culture. But the capital raising side is tough for founders. So I think that's where, because it's not something that they want to do all the time, but they have to do if you're in the venture capital journey. And so I found myself, that you're talking about value add. I found myself always like talking to the founders, like, okay, you have to already do X, Y, Z. Think about this, like how if you're in this venture capital journey, these are the things that you have to do. You just cannot be operating your company 100% of your time. 100% operating a company in the venture capital journey does not exist. It's like you need to be, it's like a percent of your time is going to go to capital raising, and that's going to be like this high or this low, but it's always there. And so that's
Yeah,
been one of the things that so I literally, about a couple of months ago, I drafted a very long, just for the founders that I backed, kind of like the inside scoops on like how to get better at in this venture capital journey. And obviously not the venture capital journey is not a fit for every founder. You don't have to raise
yeah,
venture capital money. But if you're going to go down that venture capital route, you have to know what you're getting into and you have to know how to navigate and the expectations that the market has.
yeah, yeah. I totally agree. And I usually tell, the founders, I'm kind of like backing up and as an angel investor and as a mentor as well.
Yeah,
That I think, and I'm gonna ask for your opinion. I
yeah,
think startups who have four founders, one of them technical with technical expertise,
yeah,
the other one only focusing on operations and execution,
yeah, yeah,
another one only focusing on sales, 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 growth,
yeah,
growing the
yeah,
company, and the fourth, full on investor relationships, then they nailed it. It's like I
yeah.
see, it's like the four pillars of the fast growing startups who are successful. I think these are the four, and I
Yeah,
strongly believe startups need four founders, four of
yeah.
them focusing in these areas. And if you have four focusing on those areas, one sales, one full-time investor relationships, raising the whole time, or not raise, even if he or she's not raising, you're not raising, speaking with VCs, getting their
Yeah.
ideas, and speaking with investors, and building those relationships, and then technical execution, then it's like bam, you're just doing great.
Yes, I agree with you. I agree with you 100%. Although I I always tell the founder CEO, right? There's co-founders, but the CEO that's leading the ship at the initial stages, especially at the pre-seed seed stage, they need to interface with the investors because the investors are backing the team, especially the CEO, right? And so I tell them, look, yes, you definitely have support. You have support to somebody help you if you have the resources, right? If you have the resources to have somebody help you, just the finance side and focus, it's great if you could do that. If you don't, some of them don't. It's like usually it's like sometimes what I see is founded like three groups, like three people. They don't have that finance person, right? So usually is the CEO has to do the capital raising,
Yeah,
which is good. at the pre-seed seed stage because I'm backing, if I have a call it a manager with very little equity, that's kind of like a small co-founder, and he's pitching me and he's doing the process, it's not good
No.
because I need to know who's leading this ship because who's the one that has the most equity, the most to lose, the who's gonna be the one that's gonna like grind this
Responsible.
because it's hard.
Who's the responsible?
Yeah, it's so that I'm backing the person. Like you obviously got to fit everything else, but ultimately, you're really backing the team and everybody in the team's more so the leader, the CEO, right? So that's the one
Especially
caveat
seed
that I
and
would.
pre-seed. I think seed and pre-seed level, yeah,
Yeah.
that's
Yes. Yeah.
yeah, for sure.
Yeah. That Series A level. I mean, it gets a lot
Yeah,
easier to
yeah,
do.
that's numbers and data. And
Yeah.
what signals tell you that a company's impact is authentic?
That's a good question. And I think that it could be answered in many ways, right? Because at one extreme, I've invested in founders that are building impactful companies that are great for society and they don't know it because they're not focused on am I am I doing this to make an impact in the world? They're just like, look, I'm building something because I found a problem and I want to like and I can really do it. And they're focused more on the monetary side of the equation, but they don't realize that what they're building is highly impactful, right, for the world in supply chain, right? I don't think this is applicable for other verticals like ad tech or like other verticals that don't have kind of like a direct climate angle, right? So that's on one extreme, and in the other extreme, I have founders that are like, oh, this is super high impact, we're gonna do the, and then the model itself is like maybe is not as impactful as I think it would be
Mm,
from a climate perspective, right?
yeah,
But they're positioning it, marketing it that way. So I'm
mm,
seeing like both extremes of the equation and so in my role, right, as the VC is to be able to look through that noise, right? Is able to see like, look, independently of how the founder is positioning impact, right? Like my understanding is like, well, is this business model at scale a positive, a net positive for the world, or is it a net negative? Right? Like I think we could all clearly say right now with social media that's paid by the by advertising that even though it was great to connect people, there are many negative side effects that are happening at scale, right? And so my perspective is like, look, if this business model, for example, we invested in this company in Brazil called Logshare, and what they're trying to do is what they're doing actually very successfully is filling the empty backhaul. So for trucking, 40-50% of trucks run empty because they're on a one-way mission. They're going from the factory or the warehouse to the store to deliver, and then they come back empty. That's the way the world works. Okay. And so Logshare is like, well, they're coming back. Well, why don't we find somebody else that needs that cargo to like come back to the general vicinity of where they're going back? So they're making these matches happen. So imagine this type of platform at scale, right? If they're able to scale this, they're literally removing trucks from the road because they're able to reduce cost, they're reducing emissions, they're optimizing, right? And in this case, the founder was very cognizant of the impact angle. So he was very kind of like, look, here we have a potential high return and high impact. So it was a very easy, right? And then I have another founder that's like, on this other extreme where, the name of the company is Autoscheduler, where they're optimizing warehouse operations. So they built all these APIs and they're probably like one of the leading warehouse optimization companies. And they're focused on like the hardest type of group to sell to, which are like multinational consumer goods companies. Like we're talking about like, the clients like, Procter and Gamble and Kellanova, and they just I signed on IKEA. I have a couple of big enterprises that I introduced as well that I can't mention, but they're closing. And it's like, look, if they could reduce, and these are massive warehouses. We're talking about like warehouses as like mini, like small cities. They're so big, right? It's like if you could optimize those spaces 10, 20, 30% through increased throughputs in these facilities, So you just optimize the inventory that's in there, optimize the way they operate with just people and process through smarter technology. That's huge carbon reduction. The founder was like, I didn't even really thought about that. Like I was like, I'm just like, kind of created the solution because we saw all those problems and they need optimization with people, labor, but never really thought about it until I was like, well, have you thought about this? And like, wow, like we actually have this impact angle, right? That we could also market to people, some enterprises that care, right? So just giving you a sense of like how broad, the spectrums are.
Yeah. And what has this work taught you about the discipline of saying no, even to financially attractive opportunities?
Well, that's why we have a very specific thesis, which is optimization of supply chain, right? And so most of the companies that are in the technology space for supply chain and logistics are optimization. There is one step removed, for example, that is necessary in the bigger vision, right? And so an investor could, for example, if they're just looking at more of the singular vision, meaning that one investment, they could be like, "Hey, Marlon, you really look like you really went for the returns here and not the impact angle." But if they look at the overarching impact thesis that we have, not that one individual company, you see how essential that investment is for the overall theory of change that we're proposing, right? And so the name of the company is called Katina. And what Katina is doing is they're building like 90% of US trucking are mom and pops with 10 trucks or less. So you're talking about like hyper fragmentation, right? It's like crazy. How can you artificial intelligence and all this autonomy in a space that is 90% mom and pops with 10 trucks or less? It's like it makes no sense. And so like, you have all these AI companies and all this cool stuff happening in trucking, which is great, but you know what's missing for all of them? The data layer, the data infrastructure.
Yeah,
Like if you want to be able to actually make sense of all this chaos, you need to have a very well structured data layer that's
yeah,
giving you real data that you can take action upon, right? And so the founder is, in this case, very focused on returns. Like, hey, there's massive opportunity to become the infrastructure data layer for trucking and in the US. And I'm like, yes, then from a venture perspective, this could be a great return, but you're also necessary infrastructure in order for us to actually be able to make optimization a real thing,
yeah,
right? Because once you get and the data that they're getting is super valuable. They know where the trucks are. They know like
yeah,
if the truckers are hard stopping, if they're speeding, if they're like, because they're getting all this telematics data, which is like the best type of data that you could get in trucking is the telematics, right? This is what the telemetry is telling you. And that's what they're doing. They're building like these like massive like so anyway, so in that case, it's like when you look at my overarching thesis, that makes sense. If you just look at Katina alone, you're like, hey Marlon, what happened? Right? So you have to really understand the broader theory of change that we're proposing to understand our decision making in all of these companies.
yeah, amazing. And what responsibility do impact investors carry that traditional investors often underestimate?
We carry the responsibility of reporting, right? So, because we are attracting capital from limited partners that cares not only about returns, but also impact. And the
Yeah,
only way that these investors are able to justify these investments or is through reporting, right? So impact funds need to report. Like that's what comes along with the territory,
mhm,
right? Which is tough at the pre-seed seed stage when there's not a lot of information, right? So one of
yeah,
the things that I try to do, not only from an impact perspective, but also just from a financial perspective, is get the founders to get better at reporting. Because that's a huge strategy for capital raising. We could talk about that separately, but it's just you just have to get used to it, right? And finding those KPIs that could open other pools of capital, right? Because or just knowing how to sell the story, right? because a lot of these founders, especially in supply chain logistics, they have this impact angle that they don't know about, right? They don't know how to package it. They don't know how to like report it, right? So that's what that's one of the things that I see as our role is helping educate those founders in the way that they report, so we could report, and so we could also attract other investors that care, because that pool is just going to increase. Like it's just I find it inevitable. Like like I
Yeah.
think there's right
Yeah.
now, we went through like, okay, the people care about impact, and they kind of, and I'm not a fan of ESG, like, because there's so many different things that are tied to it. But if we just talk purely about climate, right? There's like it went through like a boom kind of together with ESG, and now it's like, oh, now it's like kind of at a low
Yeah.
because of U.S. policy, and but then you have this new generation that's like, I'm adopting like this planet, that I'm inheriting this planet, and I need to I want to invest in what's going to be good for my future and my children's future, right?
Yeah.
And also see a return. So there's going to be a lot of capital coming to this market, and so because of that wealth transfer, and
I
so it's going to come back, right? And so so it's like, if founders are know how to tailor the story to that, they're just going to have a lot more access to capital. And the name of the game is access to capital. Like that is, at least in the venture capital journey, right? It's
yeah.
not the name of the game for other types of businesses, but in the venture capital journey, that's very important.
Yeah. And let's come to some philosophical questions. What are you unlearning with the whole, VC experience, and what beliefs about success, wealth, progress have you completely outgrown?
Have I outgrown? That's a good question. And I would say my belief wealth has changed over time, right? As you get older, the definition changes. As I was younger, I was like, I was never too, I always, because of my story, I always leaned more towards, look, I want to make money and do good. I always had that kind of philosophy. But obviously, I wanted to, like make a lot of money, and I did have the chance. I mean, we did have an exit. I did have capital. I was like, oh wow, it was like, I was like, I wasn't really planning on like, getting to those levels, because I was at a certain point in time. I was like, hey, maybe I should go into nonprofit because I like the impact. And then I was like, what I came to see was like, well, the impact is really in the capital. Like having capital is a tool to help generate positive impact. So it's like, if you're just as a nonprofit, you're always like raising money and you don't have a sustainable model, it's like it's very difficult, right, to scale. So I think impact, you need to scale. Like this would be a systemic type of scaling that has to go along with it, right? And so so initially I was like, okay, I could do it well and have a lot of money, right? And then as I made capital, I was like, well, how much more do I need of like, a nicer car, or like, more things. Like I actually started to get less detached with things. And I was like, I was care more about kind of the experience that I have with people, and and like travel, like not necessarily, like things themselves, right? And so over time, I was like, you know what? It's not really about, I'm not building Blue Impact because I need to make another few million. It's like I need to build this because at scale, this is generating a multiplier effect where the founders that we back benefit, their employees benefit, the society benefits because of what they're building, LPs benefit because of what we're building, the fund benefits because we're providing the returns and the positive impact. So it's like this flywheel of value generation that becomes more systemic, right? And for me, I was like, wow, if I could do that and at the same time build great relationships, it's like,
Yeah,
then you
that's
have
the
the holy
impact.
grail. It's like, it's like you have like you have great relations with founders, with people and that's and we're doing that, at Blue Impact. We've had attracted amazing LPs that are from the industry, developed great relationships with them, the founders that we're backing, great relationships. So it's like, so you get this other layer of just like amazing relationships that you build along the way. And so for me, that's like that's where like true wealth is really being created for me. It's like aside from just the capital, it's really the relationships and the positive impact.
Yeah, I fully agree. Yeah. Thank you, Marlon. It was a lovely conversation. I learned a lot and also changed my perspective in a couple of, you know, areas. And
Oh,
finally, one more question before you go, which is a question I usually ask to all of my guests. If you could leave one message for the next generation of impact investors and founders about courage, restraint, and responsibility, what would that be?
the one piece of advice that that I would give is that don't give up, right? Because it's such a tough journey. Just first of all, just building a company is very tough, right? It's like a roller coaster. You know, you're gonna have your ups and you're gonna have your downs, and then the downs could like, you think it could be like game over. But it's and then when you add layer on impact, right? Then you also have like the current moment that we're in where people are naysayers, where they're like, oh, that all that stuff is hogwash. It's like, and it's like, so and you're in this journey, and on top of that, you're having society tell you this all BS, right? And so if you're going down this route because you believe it, you're passionate about it, and you're willing to sacrifice, don't let those things deter you, right? You
Yeah,
just have to push through. You have to, it's not, you have to hustle, right? Like grit is part of the game, right? If you don't have that in your DNA, it's going to be tough. And so also, from one angle, I say don't give up. From the other angle, I also say, be very true to yourself, right?
yeah,
Because it is you only see the glamour. You only see the founder when they're like at IPO. You only see a founder when they're getting VC backed, and it's like, and you're not seeing. And social media doesn't show you. Nobody posts. A lot of those like
yeah.
when
All
you're,
the years
when
and
you're
sweat.
all the tears and sweat when you're down and out. So it's like, you have to like, you have to, okay, push. You could have that, you push through, you have the grit, you have the conviction, but also be honest with yourself. If this is something that you cannot, is not core to you, or is more comfortable for you, you don't want to go through the discomfort, right? Then, it's okay to do something else, right? So those, I would leave it with that yin yang.
Yeah, I love it, and yeah, I think that that's like very important to like underline and also talk about. I was in a investor event with women, I think 2 or 3 years ago, and one of the founders who just exited, she said, I usually tell the other founders, the friends, if you're building a startup, a company, it's gonna rain shit on you every day, and you're gonna start enjoying it. If you're in for the ride, you know, build a startup. But if you don't want that, just don't do it. So I love it. I give this example to my founder friends as well. It's like raining shit on you every day. It's freaking out. It's just so freaky because it's like that whole responsibility, especially if you get the investment. I think some founders do not understand that the whole process starts. It's much more painful and stressful after you get the investment. Not, getting the investment is I think the easy part. The whole process starts after you get the investment because then it's a bigger responsibility. It's much more stressful. It's raining shit on you every day.
Yeah,
Yeah.
that's the journey. That's what you sign
Needs
up
to
for.
be talked about more, I think. Yeah.
Yeah.
Yeah. Thank you very much.
Mm,
I love our conversation. I truly enjoy you as a human being, first of all,
thank
and
you.
as a VC, being an impact founder myself, I have a thing for impact VCs. So,
Well,
yeah,
Nefsa, it's been a pleasure. Thank you so much for having me. Thank you for your support. And if I could support in any way, also please let me know.
yeah, same here. And thanks to all of our listeners, anybody who's watching us on YouTube, make sure you subscribe to our channel, and I'll see you in the next episode. Bye for now.
Bye bye, Nefsa. Thank you.